Hello and welcome to yet another episode of Market Makers in conversation with a very special guest, Shyam Shekhar of IThought, and joins us for the first time on ET Now. Shyam, good having you. Thanks so much for joining in.
My pleasure.
From whatever little I read about you and heard about you from people, you are a long-term value investor.
That's right.
So tell us, how do you go about looking at the markets and picking up the kind of stocks that you do?
See, I think looking at the markets and looking for opportunity is a continuous exercise. So as macros change, you keep on studying businesses. You have your own filter in which you like to study businesses and pick. When a business matches what you expect out of an investment, only then it becomes an investment. I don't think one can become a rehearsed investor. Like, I cannot say that in the next 1 month I will find an idea. It never works like that. So over years, when you study some businesses, you develop a greater liking for those businesses. And when you find more businesses which are similar, you are able to make those investments faster. Otherwise, it takes time to identify an idea and to put money in it.
What do you make of the current markets scenario right now? I mean, we've had some global events. The markets have largely, for a lack of a better word, ignored any kind of repercussions and have only gone up. Lot of money sloshing in from the FIs as well, which I believe is the reason why the market is still staying up. What are your thoughts? How are you approaching investing in the market scenario like this?
I don't find great value in this market.
You mean the headline Nifty?
No, not in the headline Nifty. And in the area where I invest also, which is in the small and mid caps, micro caps, I find that valuations are definitely not attractive. Which essentially means that if I am to make an investment now, I would have to make an investment based on earnings a few years down the road. Which means that I must be certain that the bad news which could arise in this intervening period gets priced in. That's not easy at this moment, because market is in a mood to price in all good news. And in most stock valuations, the bad news is definitely not priced in.
Okay, give us an example. I mean, which sphere, which segment, which sector do you think, to your mind, based on valuations, is pricing in 2 or 3 good years and might see a tumble if indeed bad news comes?
Actually, most good small cap companies which have ROE in excess of 20% are all trading at valuations which are discounting earnings 2 years down the road, wherever the ROE is good. And in all those businesses, it is not pricing a reversion to mean in commodity prices. So all the good news is factored in and no bad news is factored in. And another aspect which doesn't seem to be factored in is many of these businesses have a global connect. They are exporting businesses. Their business fortunes are assumed to be linear. So I think that these are aspects which are not priced into those valuations.
Okay.
Because people are in a hurry to buy large quantities of good stocks. There is a definite hunger. And you have too much capital sloshing over these segments. People don't want to invest in larger businesses. Even if a large company is throwing out free cash, if it is not looking attractive in their perception, people don't want to touch it. So they would rather go for a small company which is throwing free cash and pay a multiple in excess of what this large company will trade at. For instance, I'll give you a simple example. A business like Coal India, which is facing all the headwinds, throws out free cash year after year. It's got very good ROE metrics. But try telling an investor to buy a Coal India, he will not like that idea. He says, why are you talking to me about this idea? He would rather hear about an unknown small or micro cap company.
Why is that happening? You think the PSC factor also has to do something?
No, it has to do with this belief that one has to find multi-baggers, which is in a rehearsed manner. And unfortunately, the truth about stock market is multi-baggers don't happen in a rehearsed manner. If somebody bought MRF and made a multi-bagger of it, I'm sure that it did not happen in a rehearsed manner. It happened over conviction and long years of holding, over which the idea played out. It's not bought and then predictably it does not rise to become a multi-bagger. But I think investors have this misplaced expectation that multi-bagging is a predictable exercise, and that you decide today you're going to make an investment, and over the next few months or days or years this is going to happen. I can see this, and this is essentially a very good signal to an investor that he should be very, very cautious.
So, in your investing, and we'll get to your investment philosophy and you maybe some bit of your top holdings as well. But in your investment psychology, do you also hold large cap, 10-year, 15-year slow compounding machines in addition to small cap multi-bagger ideas that you may have?
At the moment, I have one HDFC Bank, which I have been holding for the last 4 years.
4 years.
Yeah, but principally, my background as a small and micro cap investor gave me a lot of opportunities, and my size allowed me to only be in that space, and I enjoyed it. But I think that over the coming years, I would need to change my style and try to adapt to larger companies and buy them and hold them.
Why HDFC Bank? That is expensive. You're talking about how people are ignoring any kind of not giving any kind of credence to the valuations. HDFC Bank has perennially remained an expensive company, even more so now, trading at new highs.
See, I think that the ability of certain organizations to draw customers keeps them higher, whereas others are losing customers very easily. And the second is technology. The third thing is that I think more predictable earnings as a company grows in size is something that has to be respected.
Okay. And you think HDFC Bank does deliver that?
I think so, and they have so far not shown what they can do in rural India, where there's a lot of money.
Sure.
So I think that if the same service offering is going into rural India, I would think that they would continue to do well, and I would like a compounder like that in my portfolio, which will have an anchor place. So therefore, I bought it.
Okay. What about, so that is that one which is the large one. What about compounding machines within the small cap space? Because I mean, yes, we've had giants like Tata Steel, Reliance, and others, which were large companies and remain large companies. But I think over the last 15 years, India has been more about a market which has seen the emergence of micro cap or small companies becoming very, very large, sector leaders in their own right as well. Where within the current market context, in which theme, which sector do you foresee that emergence, wherein people need to do their homework, sure, but you buy that company, hold on to that company for the next 5, 10, 15 years, everything goes well, it will become a really, really big compounder or a multi-bagger?
See, I think the only place where it's very visible is in the agri-food chain, where you are going to buy an agri-commodity and then convert it into a branded product with value addition. Any business which can sustainably do this with multi-stage value addition will have a sustainable future, because in India, even now, a very small part of our agricultural produce is value added. So I see a huge scope for that. So essentially that value chain is where good businesses will get identified, bought into, and held for very long periods of time.
Okay. For the benefit of our viewers and simplification, within the agri space, I mean, people get confused. There is this whole agrochemical space, PI Industries, UPL, and a few others. Then there is this irrigation companies, Gen Irrigation, EPC, and then there are a few others as well. Fertilizer companies also get clubbed out there. Which within of these pockets are you bullish?
See, there are you can look at it as two things for the moment. One is the input opportunities, where your products are inputs into the agri value chain, and where they are outputs. Now, I am biased more towards businesses which are taking the output from the agri value chain and then adding value to them. Like, for instance, businesses which buy milk, rice, pulses, and then brand and then sell them, or businesses which buy all of these and make food products. So those are the places where I think that there will be a market behavioral change amongst consumers, where businesses are waiting to be built into billion-dollar sizes.
Now, so you wouldn't go for those dairy companies, but you would rather go for companies which use the dairy products and make a branded eventual product.
So dairy companies make dairy products. It's a misconception that dairy companies simply process milk.
Because no, not at all. Parag Dairy is a shining example.
No, all dairy companies make value-added products. Those value-added products are very small part of their product portfolio at this moment. But over the years, you will find that they become 40 or 50%.
Okay.
The operating leverage of those businesses at that stage is really not factored into their current market prices, because you will find today the margins of a dairy company are low single digit, maybe 5%. It can become closer towards 7-8%. But that can be a huge difference on a large base.
Got it. Right. Okay.
And they can operate without much of additional capital also.
Okay. Okay. Another agri theme is sugar, and I think, if I'm not wrong, you did start picking up sugar stocks when the cycle kind of showed signs of bottoming out. Everybody's skeptical about sugar because of the losses that the companies have made over the years. Why are you so bullish here?
See, this is where just merely looking at balance sheet and profit and loss accounts and valuation will not help. You have to understand that sugar is the most sensitive crop in UP. And political sensitivity of sugar is so high that if, let us say, a party wants to have a stable presence in Uttar Pradesh, then they need to manage this right. Somehow the political parties in the last 10-15 years chose to ignore the importance of managing farm interest or farmer interest. So they were taking decisions which were not sustainable, which actually ended up being against the farmer's interest. So it was inevitable that a more balanced approach towards ensuring stakeholder protection in this industry was coming. And at that time, the valuations were like stock options. For instance, it was selling at a very low valuation. The valuation of most sugar companies was very low about 15 months back. So Balrampur was at 25% of its current valuation. Same with Dampur.
Yeah.
And large institutional sellers were willing to dump the stock and run. So it was a great contrarian opportunity where we could see that government had to interfere. It had no other option but to interfere.
Right.
And that interference would not be temporary but would be long-term interest. Today you see that the sugar industry has been cut off from the global market. You have an import duty and an export duty, which is a very rare combination. But the intent of this is to ensure that Indian sugar operates independent of global markets, and there is a good balance between the stakeholders, which is the farmers and the mills.
You think this run could continue? I mean, one, on the commodity, which is sugar, and two, on companies like Balrampur, etc.
See, I think that the industry is continuously finding scope to improve its efficiencies. For instance, they have put in a crop which raises the yield, and that crop is growing to cover almost the entire Uttar Pradesh in the next couple of years. So yields will go up. And then you are getting drip irrigation, which has not been there so far. So I expect that in the next 5 years, the entire belt will be covered by drip irrigation. So these are all things which throw more and more opportunities. So you will have to study an industry from multiple ramifications. We started discussing about sugar. Now I am mentioning drip irrigation. So there could be an opportunity even there. We'll have to wait and see how it plays out. But principally, a structural change is something that should be played.
Sure. An interesting thing that I noticed is that while you are in South India and those are the more stable players, you're still opting for the north-based sugar players. Like
because the capacity is high, water availability is plenty, and in sugar, volume matters. How much you crush has a huge impact on your profitability.
So the natural choice is Balrampur Chini as opposed to some
large companies.
Large companies, yes. Essentially. So
those with very large crushing capacities and who manage the cane areas better than peers.
But let's talk about some of your top holdings and maybe why you decided to go for those. Since you're on the topic of agri, KRBL stands out. I mean, when did you buy it? Why did you buy it? Why do you hold it?
I have been holding this stock for a very long time, more than 6-7 years.
Okay.
Basically, we bought it in the previous cycle and then it fell. When it fell, we bought more.
Okay.
And around the buyback, which they did, around 25 rupees they did the buyback, we increased our positions and we have been holding on. Principally, again, a play on Uttar Pradesh and the farmer. Basically, we feel that I am very bullish on agriculture. So I always look for investment opportunities where we can leverage on what the government will do for farmers and how productivity will change the outcomes. And most of these products are not value added. So there's a huge scope to value add those products.
But there has to be a reason why a KRBL over others, right?
No, return metrics were good. Principally, I like to buy businesses which have good return metrics. Generally, the market perception at that time was that the company has long cycles, cycles, because you have to age the rice and then only after 18 months it really hits the market. Now, I have two agri plays which I have been bullish on for more than 5 years. One is milk, where the cycle time is not even a day or few days. And the other is this, which is 18 months. But you will interestingly find that the return metrics of both are actually very, very decent and comparable.
Okay.
So, which means the industry is able to absorb that cycle and still return very well to the shareholders in terms of return on your equity.
Okay.
So that is what matters basically. That the reason for bullishness is that a business has a structure which is able to add value over sustainable periods of time, and we have seen it even in the bad years and in the good years. Now it seems to be a good year, but we have seen it in the bad years as well. So the stress test, you know how bad it can get and how good it can get. And if you buy it at a valuation which is very, very attractive, then you have the ability to hold on to it for very long periods of time.
So all going well, you'd be comfortable holding KRBL for the foreseeable future as well. You've seen it in the bad times.
We have held it for a very long time, so I don't see any imminent change to change my investment decision.
Of course, and standard disclosure, of course. This is just a discussion, not a recommendation. Please, if you should do your due diligence before you take a look at some of these names as well. The interesting one, a large mid cap, if you will, or a large cap in its own right, is Pidilite, industry leader by a wide margin. Only now it is probably for the first time seeing some serious competition starting to come in as well. Asian Paints is now entering that fray, and that's no mean player. That's a behemoth with large capacities and large distribution channels. You think Pidilite will still be able to hold its fort?
I think over the last 20 years, I think they did, if my memory is right, they did their IPO in 94. This has been one of the most spectacular companies, and yet it did not get the respect that it deserves. Only now it seems to have got a valuation which matches Asian Paints. Always Pidilite was given a discount to Asian Paints, and if you see the way it had performed and its consistency and ability to deliver, actually it has done much better than Asian Paints even in the down cycles. So I believe that Pidilite is actually a company superior to Asian Paints in terms of what it can do. It has one bad misallocation of capital in that plant which it has not solved, but other than that, this is a company which which should be actually put in the same bracket as Asian Paints.
Right, as it may be, but you don't think this competition coming in via Asian Paints going in the adhesive brand segment as well could create a problem or two?
I think the dynamics of the paint industry is very different from the dynamics of the furniture industry. I think the dynamics are different, and I don't really see Asian Paints coming up with any great differentiation in that industry. The differentiation in the paint industry was possible because the competition was completely placid, and the quality of the management team of Asian Paints was always superior to the quality of management, and their ability to manage capital was also far superior than the industry. I don't see that happening in this case with Pidilite.
Got it. Okay. Interestingly, and this stock has done actually very well. Again, La Opala. Now, what was the reason why you got into it?
See, actually, the genesis has to do with my study of the kitchen and consumer behavior surrounding that. And I had bought TTK Prestige in 2001 at 20 rupees. But I sold it after I made a few times in 2003 or 4. And then I tried to buy it back in 2007. That was not possible. The investment premise was that the time spent by a woman in a kitchen will start getting valued better. The premise played out after 7 years. It took a long while, and the company went through a lot of ups and downs.
Right.
So I was looking for something else similar to that, which would become a theme and hold out for a very long duration of time. So the idea simply was that if you look at your dining table of a traditional Indian household, you will see a lot of stainless steel. My belief is that there will be a vast segment of the middle class and the upper middle class who will not see a stainless steel vessel or plate on their dining table in the coming years, maybe 5-7 years.
Right.
So that means it's a huge opportunity in terms of a market opportunity.
Right.
And this was a company which had excellent metrics at 100 crores itself, revenue of 100 crores. It had outstanding metrics. And I think the valuation at that time was around 100 crores.
Right.
So 100 or 120 crores. So we bought and we have held on.
It's gone up substantially. You
See,
still
the
think
problem
there's
is
room?
that there aren't too many businesses of this kind, and a lot of people want to own these businesses. Therefore, people pay a premium way in excess of fair value. So there would be times in the cycle where the stock will trade way in excess of fair value. Maybe it will discount 2 years earnings or 3 years earnings ahead. But I would think that any price correction should be used to only buy and not to sell, because you trade out, you will never be able to buy, because if the stock gathers momentum, then you will never be able to catch up. Like when I bought TTK Prestige, it was a 150 crore revenue company.
Sure.
It was 150 crore revenue for few more years. Today the revenue is $500 million, nearly a few thousand crores. So when it gathers momentum, you will not be able to buy back the stock.
You think this has a multi-year story running for it, Opala and players like it?
See, I am basing it on a theme. So
Yes.
now, how soon the team will play out is anybody's guess.
Yeah. No, your thought.
I would think so.
You would think so. Since you're bullish on the agri theme, we hear a lot of people talk about players which are taking agri to the houses of people, bringing branded products to the houses of people. I mean, there's a Future Consumer Enterprises, which is probably a theme like that. There are a lot of others too. I mean, and there are. I mean, is there merit in these companies? Because as of now, until now, India has probably seen a big bazaar, which is a retail format. People haven't really, I don't know if we have too many companies which have done this sort of, in the listed space, which have done this theme before. Do you think there's merit here?
Not yet in the listed space, but I am in touch regularly with a company as a customer. It's a company called Big Basket, which I think is doing a great job. And the fact that Big Basket is doing a great job for the customer clearly gives me confidence that this could be a very, very big opportunity. Because it has the ability to become a very, very big industry.
Right.
That is taking a product to market rather than bringing a customer to a market.
Got it.
I think that will be a big industry. And if Future is entering it, we have to see how they do it. I'm not aware of how they're going to do it. I would like to see how they do it. But there's a clear evidence in these app-based companies like Big Basket, which have done e-commerce companies, which have done a great job of it.
Yeah, I think as of now, we probably just have one company in the listed space in the .com/app vertical. Nevertheless, the other couple of points that I did want to discuss, one is on the microfinance companies as well, because since you track agri so closely, you would have a sense of what's happening there. There are these, now it's a space within itself because there are 3 or 4 reasonably large listed players out there. What is your opinion there?
See, I'm very bullish on JAM, the government's idea of connecting the 3. I'm not positive on microfinance, because if you're bullish on JAM, you have to be bearish on microfinance. Microfinance is organized usury. Please understand that when a public sector bank or any bank goes into a town, it has 2 sets of stakeholders. Those who are given the bank money and those who have taken money from the bank. So if the bank tries to become aggressive to recover money, it will always have a supporting set of stakeholders. Whereas a microfinance company has 0 stakeholder on one side and all stakeholders ranged on the other side. Now, what happened in Andhra Pradesh can happen anytime, anywhere in the country.
Sure.
So I think that structurally microfinance is a weak business. I don't think that this business has the kind of management bandwidth to manage growth extensively like a bank can do. And I believe that in an era where you feel interest rates will fall, I think that this kind of business has got no real future, where every citizen has to get low interest rate loans, not usurious loans.
Okay.
I would not give a PE multiple to usuri. That's my simple view on microfinance.
Fair call. Last couple of questions. One is, what's the latest, if you're at a liberty to talk about that, what's the latest company that you bought and why?
No, I have not bought any large company in the recent times.
Okay.
And the problem about discussing small companies is I don't meet management. So I myself would not know whether that idea will turn out to be a great idea.
Okay.
So I would prefer not to really mention a small company about which I am myself exploring and understanding whether it is going to win or lose.
Shyam Shekhar, pleasure talking to you. Thank you so much for joining us on this leg of Market Makers and talking to us. Well, with that, it's a wrap on this leg of Market Makers. Hope you enjoyed watching the show as much as I enjoyed doing it. Thanks for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.